Okay, so if you look at yesterday, right, on the S, here's the problem that we're having with the market currently, is it's doing this grind. There's absolutely zero rotation, and I'm gonna have to use my old tools because I have no idea what's going on with that drawing tool, but I'll figure it out and get it worked out. Okay, so if you look right here, this is an hour of grind and chop up. So if you're new in the meeting or if you come to the meeting, as you know, my entire objective is to get as many contracts as I can in a structured manner, right? Not kind of jerking them up or down, but slowly building them over time into a trade and then getting rid of my risk as soon as possible. So I need two things to accomplish that. The first thing I need is a good rotation down into a support area so that I can buy when everyone else is stretched out to the downside, or if I can short when everyone is stretched to the long side. During holiday markets, that becomes very difficult. The closest thing we got, right, to getting a short off yesterday was right up here at 1837. 1831 was our low. This is normally right here where I'd start looking for a short, and preferably higher if I could. But this is normally where I would look for a short. And obviously, uh, absolutely nothing came of that. There was no opportunity. It came in the last minutes of the day. So the second thing is that we'll want to see today, right? There's clearly a trend going here, and it looks like this. So what I would recommend is you throw that on your chart, right? Or suggest at least. And the first thing we're going to want to see is getting this broken. So we have to get below 1837. Hold on one second here. Daniel, see if anyone has Ian. Okay, great. All those messages popped into my box at one time. Great. So I'd have that on your chart, and what this tells me immediately is I need to see us trading below either 1837 or 1836, depending on where we open, before we get a downside move. And generally speaking, right, that move will look like um, usually the way the move will look is we'll break below a trend line, right? And if it's going to be even with a strong break, unless it just flushes straight down, we'll usually come up and get a backside test, and hopefully with a good stretch, that'll be a great short entry. That's one possibility, right? But you have to remember, even if we break this morning, looking at this, if we come back just a couple of days, right? We've had this being, and we could probably adjust it now a little bit like this, but the channel, there's another top of this larger channel sitting right below here at 1833. And on thin markets, it's hard to get a strong directional move one way or the other. But we need to see this area broken and this area broken before we can get. Hold on one second here. Just gonna go offline on my Skype so that'll stop. Um, Before we get any kind of substantive move to the downside. Another couple of things that have to happen today to get a downside move, right? Again, this is completely without the chart. So we're trading at 1838.50, which, by the way, on the chart you're going to have to adjust the you need to adjust the Globex highs for the open. My guess is it looks like we're going to open and bang out right against the top. So we need to get below here, right? This 1837 and a half, 1837 and three quarters. We have to trade below this area. And gosh, I hate the drawing tools they have here, and I can't get my other drawing tools started up. So I will see what is wrong. Apparently I missed the licensing key that I need there, and I'll get it fixed. However, we have to trade below here, right? Here, I'll just improvise with this. We have to trade below and hold below. So if we're opening at 1838.50, right? I don't want to jump the gun. What I want to see is us come back in underneath, right? And then the idea would be, first of all, that that's a potential trap trade. But what I want to see is when it comes back up this way, here I can fix this. So what I want to see on the backside, right, is when this comes back up, I want to see it reject out of here. Then I need to see it underneath, ideally underneath the trend line. Remember, trend lines are just, they're there, but they're not, they don't have to be respected. They're not overly strong. This is a one-day trend line. It could easily be broken, right? It just gives me some general guidance and where to look for potential inflection points, right? But it's not the same as having a zone. I don't trade off of the trend lines. I just use them for guidance. But what I want to see is this uptrend broken, obviously, first of all. So at this point, we have nothing indicating that we are going to break below. It opened yesterday. If you look at yesterday's rotation, right? On the open, the first candle indicated the low of the day, and we just were grinding up. And the previous day was very similar as well. First candle was the low of the day, and we're just grinding up. So one thing that I want to see in that is a change in that behavior. I'd like to see us trade below the low of the first candle. So wherever that candle is that it opens after the first 5 minutes, I'm going to draw a fat line underneath it. If we don't get underneath there, I'm probably not interested in shorting at all unless we get a big stretch to the upside, right? Because again, in markets where it's a thin market, there's always obviously the equal number of buyers and sellers. So the only question becomes is who's more aggressive? Well, clearly in this environment, the sellers have become very weak and the buyers have become very aggressive. Even with that, right? Even if we did get a rollover, I would suspect that when we get a move, if we move from 1836, right, all the way down into 1829, I would expect responsive buyers somewhere in this area right down here, and I'll highlight that. Okay, and there's zones in there, and initial support is down in this area. But I would expect responsive buyers, even if we would end the day to the downside, I would expect people to come back in and try to push back up. One caveat, at the end of the year, markets can get directional with no rotation as we're seeing up, and it can happen the same way to the downside. There's only one thing I see that's a possible concern, and that's some analyst downgraded Twitter this morning, and I think on the NASDAQ that a lot of people are simply holding their positions for a long time, assuming that we're going to close out the year at the high. It may be a safe assumption, I don't know. But whenever that little bubble bursts, right, let's take a look at the volume profile here real quick. Okay. This is the NASDAQ daily volume profile, okay? So the first thing that I notice is we're not getting huge stretches, like even this morning on this gap up. ES is a 2.75 point gap up. NQ, this is a 3-point gap up. It's pretty much nothing, right? The other thing that I notice here is that these days up are getting smaller and smaller. Yes, we're still one timing, which means we have failed to break the prior day's low, which is one of the first things I want to look for a change in behavior, right? But we're also really stretched. Look what's happened in the past. This is 1, 2, 3, 4, 5, 6, and we're working on our 7th day of a gap up and go, right? So the best way that we have to get an idea of what might happen is to look at past circumstances and what happened after that, right? Here we had first day up 1, 2, 3, 4, 5, 6, 7 traded sideways. And if you'll notice this right here, this was the first day we got, we stopped one timing. We traded below the prior day's low. And if you'll notice on this date, we did not close below the prior day's low. We just traded below. Responsive buyers stepped back in and pushed us back up. But it set off a change in behavior overall in the market, right? Instead of going vertical, we started trading sideways. And there was two sides of this market, and you can go both short and long and have profitable trades, right? Versus in this area, you pretty much just wanted to look for an entry to the long side, any kind of rotation down, and you wanted to push your longs as hard as you possibly could. I want to look at one more example of, and how that worked out at the end, because it gives us, again, a good idea of what might happen. In our biggest stretch that we had, or one of the biggest stretches, was back in October, right? This was the first day of the reversal. 1, 2, 3, 4, 5, 6. This was day 7. But if you'll notice, right before we reversed, these days started getting compacting on themselves. The extensions up declined significantly. Again, that did not mean we reversed and went lower, right? Usually what it's meant in this market is that we've stopped and start having two-sided markets where you could buy dips lower for pushes back to the middle, and you could sell pushes higher for a push back to the middle, and have very successful balanced trading. And that would really be the best environment, or the preferred environment for me at least, is to have balanced markets. When the markets go vertical, either up or down, we tend to get these opens and flushes. And those tend to not give me very good entries, right? Because I want, again, remember my primary strategy is to catch other traders when they've essentially outrun their supply lines, right? They've gotten ahead of wherever the other buying pressure is, or they're running into sell supply. But preferably, I want to catch them when they're weak. If we open and go, I have to guess that this is the result that we're going to have. And if you can do that, that's fantastic. Okay, but this is not a gap down. We opened within the range, right? And these are very hard to get. And usually, what happens, which my observation is usually, this is what I'm talking about right here, by the way, guys, so you can see clearly. Usually, traders that catch these kind of moves, we opened here, we close down here, but they catch these flushes down, right? They end up being break-even traders because what will happen is they'll try to guess this process. And the same trader that shorted here and caught this entire flush probably also shorted here and got smoked, shorted here and got smoked, shorted here and got smoked, and shorted here and got smoked. There was really no clear setup for a big downside move. Where downside moves do get good setups, and again, this is focusing on NQ at the moment, right? If you look, okay, this is a good example. We opened and flushed here, right? But if you look the next day, we opened, we pushed up and closed near the high. But over the next couple of days, you had short entries where you could trade it to the downside with very nice rotations, both up and down. Again, in balance. Finding a big significant down day in NQ seems almost impossible here. But here's another example, right? We closed low. We tried to push higher above a key area, 3150, and we found responsive sellers in. Also, when trends tend to reverse, and particularly in NQ, right, you'll see they're usually accompanied by big gaps, right? Either to the downside, right, where you see you could have traded these to the short side and to the long side repeatedly. So at any rate, I'm not overly eager to take the short side on NQ yet. I would love to think it's going to break, but part of the discipline is when you're getting moves like this is you got to be able to tell yourself in your head, I know it's overextended. I know it should come back, but it doesn't. But those are emotional responses. And the shoulds, if you look statistically, right, um, generally don't pan out. The market goes further than we can generally counterbalance one way or the other. So what I let it do is instead, when I have that feeling of I got to short or I got to be ready to catch the downside, is I take a step back both for my longs and my shorts. I find myself being overly emotional about it. And I let the market tell me when it's going to break. And so then I go back to my keys again, which are here. I structure my thought process so I don't get crushed, right? So the first thing I'll do is I know, first of all, I need to get below 1837.50. So that's about 2 points below. We haven't had that. The next thing is I have to stay below 1837.50. And then to truly have any downside, right, the first key for more patient traders is going to be, and this is on ES, but I'll show you on NQ, same situation, 1830, we have to get below 1831. And odds are, if we get below 1831, this 1830 to 1826, somewhere in this area, is going to be a very nice responsive buying opportunity for a really good trade somewhere in here, at least the first time in, right? So at least I have those two triggers, right? I know that I'm not even going to consider 1837.50 until we get below, right? Or if we get very stretched above is the other way I look at it. Number two, I want a good rotation to wherever I'm shorting. If we get to 1837.50, I'm not shorting here unless we come in, right? Maybe we come down to 1834, 1833, and then we push all the way back up. And when we push back up, yes, I'll be happy to take a trade there, right? The next thing I need to know in terms of are we rolling to the downside? We have to get below 1831. First key, right? We don't even have to close below there to have a change in environment. So I can temper my view of we have to get short. By the way, I'm going to go into the open if you have to drop off. I totally understand, but I'm just not in a rush to trade today. So these help me thinking in that manner and structuring it and putting that into my trade plan help me check my emotion of the market's run too far. This can't continue, right? To to a more structured view of what needs to happen in order for me to get a trade to the downside, right? So let's look at NQ on the same chart here real quick. Let's get rid of this chart. And let's look at NQ here. Let's make sure it's updating properly. Okay. So we have the gap. What do I need an NQ to the downside, right? Again, this is my close. I have to get below the close to have a negative day, number one. This is prior day's high, right? We did get this rollover, and the behavior has been a little bit different on NQ. We have been getting gap fill, which was right here yesterday, right? Then which was generally a support area, came back up, got above gap fill, right? So I can't have a down day if I don't stay below gap fill. I realize this is very basic, but when you get wrapped up in the emotion of the market and as fast as it moves, it's very easy to make mistakes. So you have to go back to structure, right? We got below, and then the next thing we did, right? This was the high of the day. We were trading above the high of the day, and we held. So again, another clue. First thing we have to see this morning is we have to get below the first 5 minutes of print, wherever that'll be. We still have 4 minutes to go, obviously, right? We have to get below this gap area. And then to truly have a down day, right? Exact same thing as ES. We have to get below this level, excuse me. We have to get below this level right here. Okay, so that's already going to be a big move to the downside. And I'm going to look for the leaders in the NASDAQ to see if they're rolling over. Also remember, in these thin markets, I saw a lot of comments from really, really good traders that I actually have quite a bit of respect for that normally nail it day in, day out, where they are losing money. And they're losing money both in individual names and in the indexes. They're keying off the indexes to drive those individual names, and they're totally detached right now. You have algorithms can run amok in a market like this, where normally what they're relying on, right, is a lot of volume so they can offset their sell programs with buy programs on the individual names, and they're arbitraging the two to try to capture a couple pennies. But in this market where it's thin, a little bit of sell pressure in one name can totally distort what the indexes are doing on a larger picture. And so a lot of guys that are generally very good traders are got actually smoked yesterday in a market because their stops kept getting tagged in individual names. Again, I don't focus very much on the individual names, at least not in this forum, but that is something to keep in mind, right? Also, if we'll look, one more thing here. Let's go over to ES again on the volume profile. If I look at the 24-hour, I know that what I really need to get under to have any downside momentum working is this area right here. It's just below the, it's just above yesterday's lows, right? I need to see it, and this is what I'm talking about because I know I don't have my drawing tools today. That area needs to be gotten below and held below, right? So that's really the first test of sellers coming in, right? Below that, the next area that's going to come up is this area right here. If we can get below this area, this 1820 to 23 area, 24 area, there is a lot of air underneath here that needs to be re-auctioned. I don't know if y'all can see that, but this whole area needs to be re-auctioned, and that brings us all the way down to that 1806 area, all right? So if you look, if we're 1830, let's say you were bearish for whatever reason in the world that you are bearish, right? Or you thought we were looking for a downside move, right? All of these, if we're really going to get a bearish move and a retest of this break, which would technically, right, if any of us have read textbooks on technical trading, that's exactly what occurs. We get a rotation to the downside, we get a break, come back and retest that break, and then take off. If that's going to happen, that's a good almost 40-point drop from where we're at right now. You're going to get good rotations that are going to give you good shorts back to the upside. You don't have to be the first one to try to figure out where the top is going to be. If you can get it, that's great. There's nothing wrong with it. But it'll come when it comes. And usually I do tend to miss the first day of a big break. I'll end up counter rotation trading it. But through the course of that correction, I will end up getting good entries on a regular basis. Give me just one second. I want to make sure no one's hit me with a question. Okay, everyone can hear me. Great. Let me see what else I need to care. Oh, again, on the 24-hour basis, again, we're still one timing this entire process here. 1, 2, 3, 4, 5, 6 days. We're working on the 6th day, right? And you'll see where we've had changes in that process, right? Here's where we stopped one timing, was right here on this day. We followed it up with 2 days of balance, right? And then we continued that rollover back to the downside, right? But you'll notice again, here we broke this pattern. We had 2 days of changed, the market changed behavior after that, right? So I key off of these time frames when we're trending up and down. When the one timing ends, I look to switch gears. We haven't had that yet. So last piece that I want to do here, I think I covered all the bases. Have I looked at ES Daily? We can look at the 24-hour NQ really quick just to get a picture of what's going on. First thing I notice here, this is going to have to get broken to the upside, right? We haven't come close to it. Again, we need to get below here on the 24-hour, this level right here. It's not very pretty, but we need to get below this level, our first indication that things might change. Even when things change, right? Like we had right here, we stopped one timing. It went into a balance mode instead of a rollover to the downside mode. Again, I would be measuring, and I'd go back as far as I could, what the average rotation to the downside has been through this whole bull market, so you have a good idea of where to expect responsive buyers. The market doesn't repeat exactly, but it comes awfully damn close in its patterns, right? The other thing that I'd be measuring if I was interested in making money on a regular basis and getting an idea of what is normal is I would go back 10 years and go look at what are the average when the NASDAQ in particular takes off, right? How far can it run? Most of the traders I speak with have been trading for less than 3 or 4 years, right? The market has a really long memory. I traded all the way through the 90s. Tech stocks, the Russell 2000, the NASDAQ, can get really, really, really stretched to the upside. These stocks have thin floats, a lot of them do, particularly in the high flyers, and a lot of money gets in and starts chasing really, really hard, and it can go much further than you can expect it to. So be smart when you're trying to pick them off, and also remember the goal. The goal is to pick it off at a point where they're stretched. You're going to get your profit really quickly, take that off the table, right? That's all you care about, and then leave trailers. If you luck into getting a big move, fantastic, but you don't need that. For a few of my options traders and swings traders, it's a little bit different story, but the entries are exactly the same. Entries at the zone, the structure is just the same as well. We want to see the break before we commit the capital, right? Because we're not in the business. Mutual funds and hedge funds have to commit their capital early because they're moving hundreds of millions of dollars, or in some cases billions of dollars, right? They can't wait for the break and then shove all that money in. They'll destroy their position that they're trying to build. They have to anticipate the turn, both long and short. As small traders, small trader in this market being defined as really anyone less than 20 or 30 million dollars, you're a small trader. It may be a lot of money on an individual basis, but in the bigger picture of things, you're a small trader. And certainly most everyone I'm working with has less than $2 million in the market. You can move that in a heartbeat. You don't have to anticipate. There's no award for being the guy who high-ticked it, right? Because there's a big graveyard of people who've been trying to high-tick markets and low-tick markets going on for 10 years. But the meat of the market is found in between, right? All of this, if you're a trader, this right here is the best thing you can have because you get great entries, you get great exits, and you have nice rotations on both sides. And you can milk this with nice large volume trades, both in NQ and ES, right? You make money all day long. In these kind of moves right here, you have to know that we're breaking and you have to be quick because you'll notice from the opens, right? We tend to just go vertical right out of the gate. And this is a 24-hour, so this is obviously from Asia, right, is where we're opening to the US close, right? And these things pretty much go vertical from the open to the close. It's very hard to get a good position in a situation like this. The other thing I wanted to point out about is also inefficient markets where they get re-auctioned. It can be a long time before they come back and get re-auctioned. Like this area needs to be re-auctioned at some point. I imagine it will, down to 3,500. But it can be weeks or even months, sometimes years before it comes back in. and reauctions these areas. But you can see here, and I stress this point, right? You can see where we came in and reauctioned all the way down to this point, which still leaves us some space below. And actually all this needs to be reauctioned as well. But it was almost a clear 3 weeks before we got close to reauctioning anything below here, right? So don't anticipate or don't look at when you look at the volume profile and don't go, oh, it was poorly auctioned. I'm going to come back in and I'm going to come in and say, well, I'm going to short because it needs to be re-auctioned, is a strategy that will get your butt kicked, quite frankly. It doesn't have to re-auction immediately. It doesn't have to re-auction ever. We can simply have a poor auction and it can leave that space in some cases for years, right? When we go vertical, if you'll go back and look at earlier this year when we first took off, there's a lot of areas that have never been re-auctioned. And you don't want to grab onto an idea of, oh, the market auctions and then re-auctions and it becomes efficient. It can get inefficient and stay inefficient for a long time. It could be years or never when we re-auction it. It's simply that we anticipate that when it is re-auctioning, right? Like when the NASDAQ comes back in, I assume when we get somewhere in this area, right in here, this 3,500 area, that we're going to have responsive buyers. It's already been well auctioned. And we will come back up and test some of these areas above, probably back to 3550. NQ loves to do these 50-point rotations, right? You'll see these 3450s, 3500s, round numbers every 50 points. You tend to get responsive buyers. It's not clockwork, but it's pretty damn close in NQ. When you get to those round numbers, I do look for responsive sellers in NQ. Let me see if there's anything else I can point out to help people out. I haven't even looked at what the market's doing right now. So we've pushed to 1840, which is nothing. I believe we still have a very small range in the daytime frame. Let me check. Okay, so we have a 2.25 point range this morning. Normally the range in the first 15 minutes is closer to 5 points, 6 points. So again, I'm not expecting a lot. Let's look at what. So on, ES, all we've accomplished is come up and we just tagged the zone above, right? But without a good rotation. Entry-wise, it was fine. It is a resistance point. This 1840 to 1842 is a resistance point. I don't know if everyone can see that. I'll expand it out. Okay, so we came up, we exactly tagged 1840 to the tick. 300 contracts went off there. We found responsive sellers. So the first thing that I'm noticing today is we have traded below the first 5-minute bar. It's a change in character. It doesn't mean anything yet. We still have this gap fill that has to occur, right? Which would put us right into the support zone. We really want to get underneath here. I will be a buyer, by the way. If we get 1840, if we can get down to this 1833 from 1840, I will take a shot to the long side here, somewhere in the white zone. First time in. Okay. Also, you're noticing another hallmark of a slow market, right? We're coming right to the top of zones and there's no push in. We have 95 contracts going off at 1837 3/4. So the reason why these zones work is because I'm not the only guy who's figured out where they should be, right? And in a fast market or a market where normally there's a lot of participants, we'll overshoot these zones, right? Which is what gives us the opportunity. We get nice and stretched, although nice and stretched 2 points is hard to. I mean, it's just not stretched. It's not worth putting on risk. But even that being said, usually to get these kinds of just touching the zones kind of things, you need a good 10 or 12 point stretch. These are 2 point stretches. Everyone's playing from the same handbook today, which is why there's no volatility, right? Something's going to have to go south at some point. I want to see something here real quick. Pull this over. I want to see where... the thing that has me most interested today, okay, so first of all, Apple, Google, this is what I have negative on my high flyer screen. Apple, Google, Amazon, Tesla, Priceline, Facebook, and Twitter are all negative. Okay, so that's a change in character. I have not seen a single morning where all of those are negative out of the gate. But interestingly, right, the Qs are still trading flat. The triple Qs or the NQ, right? Look at this. Let's go over to NQ here real fast. Okay, this is NQ. We're still essentially trading flat. We're down $1 on NQ. So we're going to see our responsive buyer is going to come back up and snap through this. We've gotten gap fill. The first key is to see on this is, are we going to get a move up? Generally, to take a counter rotation trade in NQ, right? I want at least 10 points, which puts me down in here. And this is a really small zone. The only reason why it's here is because the Globex lows. And I would probably prefer a stretch down into the white zone. Okay, so the only reason I'm mentioning Twitter at all is because Twitter has been what's been driving this entire market. Everyone's holding on to Twitter because it's gone so far, so fast, and it's become the poster boy for all the high-flying stocks. If it falls apart, sellers will come in behind it. It's only down 4 on a downgrade, considering it's gone up as much as it has. No big deal, right? Who cares? But I am keeping an eye on it and would love to actually see the market, like I said, rotate in NQ. Excuse me, let's take a look at the NQ here real quick. Pull it back. In order to have any serious damage done, we have to get below Thursday's low. We have to get below the white zone. By the way, if we get below, it would look something like this. Again, I'm going to use these ridiculous arrows since I lost my drawing tool here somehow. What I'd like to see is, right, we come into the white zone. This is what fantasy trade doesn't mean it's going to happen this way, right? Come up in here, reject back down. Second time we flush through the white zone into Thursday's lows. So these are the potentials of what can happen, right? We either get responsive buyers here and we push back up, back through the white zone, and we come back and we test the upper end of the range, right? Which would be Thursday's high, just like this. Very possible scenario. Another possible scenario is we push below, right? People get overexcited. One of two things: we either reflect from right here back up, or we come down into this zone and come back up. But the key to that is, if we get back above Thursday's lows, everyone who panicked down here will be trapped and forced back in. And in a thin day, that is a very highly likely scenario, right? Where if you get trapped traders, it's just not going to take a lot of people like it normally does. It's not going to take a lot of people to get it trapped. So I'll want to watch the price action in this area, right? Let's go over and look at ES and how it's behaving here, and then I'm going to end this unless anyone has any questions. Okay. ES, same scenario, right? We still have failed, right, to get below. We have not closed the gap yet. It's a sign of strength. So whatever the weakness is, and by the way, NQ is still positive by a 1/4 point, okay, and ES is still positive by 2 points. Whatever the perception is of, oh, we're weak, or if you look at a particular stock, you see any of the high flyers down and you see, oh, the market's going to roll to the downside. Net in the indexes, no sellers have materialized yet, right? So, and that's the problem, by the way, that people have when they try to correlate an individual stock to or an index to another index and make the association that, oh, this should happen because this is happening. When that occurs, they tend to be for very brief periods of time, and you have to be ready to, if you're going to use that, which I don't, you have to be ready to drop it like a, like it's not working at any second. It can just go south on you really quick. And trade location, price action, that's all that matters. Also, one other thing for those that are new, you'll notice I have no indicators on my screens. This is how I trade. I'm not hiding any indicators. I use Tick is the only other additional tool that I'll use. I'll show you. I'll insert it right here. I imagine Tick is mostly positive this morning, but we'll see. Okay, and Tick, actually, it's neutral. It's been on both sides of the zero line, which is right here. Let me pull that in real quick. There we go. It's been on both sides, but we're plus or minus 400. Okay, and so far I have an indication of chop. No decisiveness either way. I'll keep my eye on NQ. But remember, for the last 3 days, by the way, one last note on NQ, and then I'll let everyone go. Look at the behavior of NQ the last... Okay. if we look at the behavior of NQ every day, right, for the last couple of days, we have been getting push downs in the morning, followed by responsive buyers pushing back up. Push down, responsive buyers back up. Push down, responsive buyers back up. And this morning, I would expect that that pattern, right, continues again when people are getting overly aggressive on the short side and we get pushed back up. Shorting is hard in this environment, and we've only had one of the requirements that we need to get a short market, right? Right now, we're underneath gap fill, and we're underneath Thursday's high on NQ. The last piece that we're going to need is we're going to have to get below Thursday's low. We're not bearish, right? We haven't even started to get bearish or even assuming that there's a change in character until that occurs. So that's my take. I hope that helped everyone. Anyone have any questions? I'm not in a rush to trade this morning. Happy to answer if you do. And I'll need you to type in the questions because I have everyone muted out. So you have to type it in the chat. Okay, I'll give it a minute, and then I'm going to bail and get myself a cup of coffee. I'll be posting up a chart, by the way, later of Tesla. I've been posting some of the individual stocks. I'll stay through the price action. I don't see a trade. I would actually need it to really rotate down. I don't have anything to trade off of. I'll see if my Tesla chart's doing anything. I've been posting more and more my chart. So here's key. We open below. So if we look at Tesla, I'll step you through Tesla. I'll be happy to do that. And I bet the Qs are going to follow. Let me see this. Yes. Hold on one second. On NQ, no, actually, Daniel, that would be a weaker area. I would not be looking to. Again, if I need to stretch, right, I want a minimum of 10 points, but I really want it stretched more than that. So our high is 88, right? So that brings us to 78. But you'll notice how tiny the zone is, and the only reason that zone is there was because it was Globex low. Okay, so I wouldn't say it's a high odds. At the white zone, yeah, I would say there's high odds. By the way, guys, the reason why I don't print a lot of my NQ trades, NQ overshoots the zones. And for guys who I'm coaching, by the way, I'd really prefer y'all just to focus on ES and not jump over to NQ until you've built your trading account significantly. Master one market, master one area. They trade hand in hand to a certain degree, right? So that's why I put up the zones for NQ and ES. But do not jump over and try to take more trades. It really, let's talk about the mental aspect of that for a second, okay? If you have not mastered one market, and what I mean by mastered is day in, day out, you are pulling profits out of that market on a daily basis. All you need is ES to do that, okay? You don't have to have multiple, you don't have to have multiple markets, multiple stocks. You don't need any of it. Again, with the strategy of increasing trade size, where most traders that I work with, when they're new, where they get itchy, right, is A, in reducing the number of trades that they run, B, waiting for their trade to come to them, right, and C, looking for action. They want to come in, they want to buy this thing. Like you'll see NQ, right, everyone who was shorting, everyone was looking at the individual names rolling to the downside, and they're getting squeezed up right now. We're coming into a key area here with Thursday's high, and it'll be interesting to see if we reject out of here. We'll tell this candle is probably going to tell us quite a bit if we reject out of here. Going back to my thought in terms of trading, we've gotten used to, particularly before we've had trading, and I mean we meaning me, you, most retail traders, right, of scanning the markets and looking for all these different opportunities. Where's the opportunity? Where's the opportunity? And what that results in is being overly hyperactive. And that's how you end up having one great trade in one market and one losing trade in the other market. And so what you end up at the end of the day is maybe you're a break-even trader and you end up with commissions lost. Okay. Once you master ES, then you can jump over and trade NQ, and you can usually do so very, very successfully. Okay, because you'll know exactly where to take your trade and you'll be very patient. I generally need on most of my NQ trades, I usually take a $200 stop on most of the contracts that I take, but I have a smaller exit strategy. Okay, which is a problem. Again, risk reward in my trading scenario is inverted, so you have to have a very high win ratio. Okay, so um, again, if you're new with me, I'm asking, please, that you can do whatever you want, but it's very hard for me to get someone consistently profitable when they're jumping from market to market. I can't identify where your problem areas are. I can't identify where you're making mistakes, or where we can improve things, because there's no consistency in your execution day by day, which is the key to going from a trader that's wow, I think I could, we all start off when we get in this market. At least I think we do. When I started off, I know I got into this because, I was a kid. My dad got me started when I was a kid, and I looked around and, trading was good, but it was all right. But then I looked at all my buddies. I was already making money coming out of college trading. My dad started me while I was still in high school. And I looked at all my buddies, and they went to work early in the morning, and they were there late at night. And whether they were in college or they didn't go to college, didn't matter who it was. They were all working really hard for not a lot of money, right? And then as we get older, those bills start to outstrip us. We find us working our asses off just to get break even. For the lucky few of us who aren't in that situation or weren't in that situation, it's a different story. So all of us go, if I could trade profitably, I can get out of this rat race and actually enjoy time with my family, go on vacations where I want to. Somewhere in your head, someone has to go, I want to get rich. That's why I'm trading the market. I know I certainly did. So if you're going with that mentality, you have to get consistent. It's the only way you can break that mold, right? What they want for retail traders, they expect 70% of retail traders in futures to fail, okay, if not higher. So if you want to get out of that, stop jumping from market to market and master one particular area. And you'll see we're getting a rejection right out of Thursday's low. So that's a new change in character so far from what we've had prior days. I'm keeping an eye on NQ here very closely. The reason why is if NQ rolls over, it will drag ES with it. NQ has led ES, not the other way around. It's only switched in the last couple of days where ES has been stronger than NQ, which, by the way, leaves us with two options, right? Either we're having a rotation institutionally out of the high flyers and into the blue chips, right? Or we're lagging. They're pumping the last of the money into the ES, right? And they're starting to take it out of NQ, and ES will follow to the downside. Again, there's no reason to get overeager to short to the downside. We haven't even filled the gap, much less gotten below it. We have on NQ, so we'll see what happens there, right? But I'm not overly eager to take this trade. I'll probably take a shot at it here because, right, usually I'm going to use a 10-point stop. A 10-point stop both has me in the white zone and gets me down into Thursday's lows. I've got two good key areas of support, and I have a fantastic rotation from the high when I'm entering down here, right? I'm stretched more, almost closer to 15, 20 points down here, which I would prefer. I'd be surprised if I see it, but I would prefer to see that. So what a retail trader does is he goes, oh, well, they pull up a chart just like I have here, right? And they go, well, Tesla looks good, or Twitter looks good today, or Apple looks good today, and I'm going to go and jump on all of those, okay? And if you'll talk to most professional traders, if you haven't read the Market Wizards, the new Market Wizards, all those guys, if you look in there, I believe 8 out of 10 of those guys had one specific strategy. They were can you open a room for a charge per month? Really like what I hear. Haven't decided whether I have a very hard time. I trade anywhere from 3 to 5 markets at one time, and I haven't decided whether I can do that. I don't know who asked that, but I haven't decided whether I actually had the ability to do that and trade and call out trades or step people through the market at the same time while doing it live. I've had requests before. I am thinking about that. Someone asked if I could open a trading room. I haven't decided yet. Going back to that, If you'll read that book, which I highly recommend, it's on Kindle. You can buy it used at all the used bookstores. Usually have a copy of it. But if you'll go there and read, whether they were trading bonds or they had a particular strategy, whatever it was that they were doing, they generally had one idea that was working in one particular market, right? Whether it was options or a general option strategy, but they were pounding that same strategy over and over and over and over and over. There was one guy who made millions of dollars trading trading two ticks on in the bond market. That was his profit target. Two ticks. He traded enormous size. Okay, and he would have massive drawdowns in between, but he started scaling out of his trades at two ticks. So, wow, someone else is coming into the room. Sure, Michael, come on in. I'm not doing anything. So, hi, Dazers. Um, where was I going with that? So, again, anything can be traded. You can trade Priceline, you can trade Amazon, you can trade options on these high flyers. All of that is doable. But most of the people that I've come in contact with, for example, in my coaching, most of the people I'm coaching have been in the business or been trying to trade for multiple years. Some of them have had years where they made a lot of money. The following year, they gave back. Um, Most of them have been break-even traders. Some of them, a percentage of them, have simply been losing from day one and have never made any money trading outside of a few days here and there or a few weeks here and there. But the majority of the guys I'm working with have been break-even traders, really smart guys, and they just can't get the handle on what it is that they need to do to make the money consistently. And usually, as soon as I bring people back to focusing and becoming experts in one market, and ES is the market that I generally can do that the easiest in, which is why I focus on it, right? Once those guys get it, they just start multiplying those contracts and the money flows into their account. No, none of us, me included, at least I don't think, as much as I love the markets, and I think the markets are kick ass. I can't wait for Monday morning to get here. I get itchy by Sunday evening. I want the markets to open up. Okay. But no one really wants to spend 12 hours a day working on the stock markets and charts and trading, right? Well, all of us want is a lot of money, right? Which one of us, if we won that $500 million lottery, would still be staring at the screen this morning? I know I wouldn't. I'd be out of here. I'd be on an island in the Bahamas, Barbados specifically. So that's where people want to be. They want to enjoy time with their family. They want to have fun. They want to drive cool cars, whatever that means for you, right? And they want to have a life of security where they're paying their bills, right? Or pursuing a passion that they actually have, whether that's building another business, helping people with charity, all those good things that we want to do in life get consumed because we have to make money. So it gets consumed by having to go to work every day. And usually it means having to go to work for 99% of us, going to work for a corporation or someone else. It's not our own business. But what the way I look at this is if you'll focus your attention in a very narrow field, you nail your trade and you repeatedly do that same trade over and over and over again and watch for small, minute changes in the way the market behaves, so that you can catch those changes early and adjust your trading style, both in the amount of ticks you're taking from your trailers, right, to the size of the rotation you need for entry, and you become an expert in one market, you can take out as much money as you want. And it should not be for the excitement of trading. It should always be for the focus. It should be boring, actually, right? It should be something like akin, in my mind, to running a dry cleaner. People are going to come in, they're going to drop off their stuff, you're going to clean it, you're going to hand it back to them, and you're going to take your money. That's all we're doing. This is wash, rinse, repeat is all it is. It should be boring as hell. You should be dying for SportsCenter to come on by the middle of the day, which I am. Usually it's pretty slow by the middle of the day. But this is exactly what I was talking about. Everyone who's looking at NQ, by the way, this morning. So here we have NQ. I'm going to show you the high flyers here real quick that I had. I don't know if everyone can see that. I'll make the box bigger, right? So Apple down $1.74. Google's gone positive, but whatever. It's $1,000 stock. It's going to need to go down $100 just to have any kind of impression upon me. Amazon's still negative. Tesla's negative. Priceline's negative. Facebook, who I got into a ridiculous argument about with some people over the weekend, negative, and Twitter negative, but not a lot. It's been downgraded, and it's down $3. Considering the run, that's like zilch. It's zero. There's just nothing there. if you look at hold on a second. So here's what a inexperienced trader would have done this morning, right? So they're going to look at NQ and they're going to go, oh, NQ's rolling over to the downside, right? And they're going to jump in, right? And they're going to try and short it. And they're probably shorting it right in here. It's unlikely. They may have tried to grab it up here, but people have been so smoked doing it here, right? They've looked at like, oh, we're below gap fill. I'm going to get aggressive to the short side, right? But remember, we're above the white zone, which means buyers are in control. I'll explain the white zone some other time. I've been on too long at this point. The only reason I'm doing this is because I'm not trading this morning. Really, I don't have anything. There's not a big enough rotation to get me involved in this. This didn't even get quite to my 10 points that I needed to even consider this trade. So what you have to look at, right, is you go, oh, NQ's rolling over. I'm going to short ES. Okay, it's unlikely that most people shorted at 1840. That's my experience is from working with people is that they're not nailing it at the right place. They're not waiting. They probably shorted here at 1838, and they're probably taking a stop at 1839, seeing NQ reverse. Maybe they'll wait till we get up back into this 1840 to 42 to take a stop. But the point of that the point of that is you can't assume just because all these individual names, the market should be rolling over with them, right? That's all the high flyers are negative, yet the index itself is positive, and it can be maddening. So, anyways, I hope I answered the question. If anyone has any needs to know anything else, I'm open to one more question. Then I'm gonna go get my cup of coffee. It's 9:06. Going once. You're welcome, Andy. Going once. Going twice. Sold 3 times. Everyone have a great day. Clients, if any of my clients have any questions, y'all can hit me on Skype. Anyone's welcome to send me an email, tradeandperform@gmail.com. You can always hit me on also with Twitter or on StockTwits. Have a good day, guys.